Hello, welcome everyone. In this video, we will review the detailed technical analysis of gold and discuss the possible trading opportunities for the next week, which we can follow to make a profit. The trading methodology we are going to use for technical analysis is market structure, and we are going to use a blend of the smart money concept. First, let's start with our 4-hour time frame. Before this, let's take a quick look at the daily time frame. Within the major range in gold's daily time frame, a support level has been created in the market. This support comes from this area, which has created a major demand zone. The market is moving within this sideways range between the support below and the resistance above. Whatever is happening, we have to see it in the context of this range. In the daily time frame, there is no trending scenario, it is moving sideways. Now, if we go to the 4-hour time frame, we can see that the market got into a break of structure. After a strong break of structure on the bullish side, this wave of retracement in the market swept the liquidity from below this low. After sweeping the liquidity, the market reached below W, causing maximum pain to the buyers. First, as many buy-side orders as possible are liquidated, then sell orders are generated from them. Smart money buys using sellers' orders because they buy in bulk, so they need liquidity for buying. This liquidity is generated when retail traders drop out. We discussed this concept in detail in the stream and have taught it extensively to our private students. Anyway, after the liquidity sweep, a double bottom was created, leading to an expansion from here. The 4-hour time frame tells us that, in the major term, we are on the bullish side and are expecting the market to go up. From this low, we aim towards higher levels. Now, it won't go directly forward. It will move through various mitigation areas, respecting them and developing a structure. This is a simple break of structure in the 4-hour time frame. What I am telling you is the strength of buyers on the bullish side. Bulls are in control. Actually, in this wave retracement, the market completed this ABC structure, doing its 1-2-3 structural retracement. After that, the market did a liquidity sweep and tested this block here. Now, if your question is why this and the block did not work, it's because liquidity was already swept from here, and this major block was already tested by the market multiple times. There was no reason for buying, and any further liquidity sweep met its match here. The context was fully developed, leading to a reversal and an expansion in the upward direction. This is expected. So, this is our 4-hour picture. Now, we cannot trade the entire move. The actual trading opportunity lies in going to the lower time frame and seeing what is happening there. Let's move to the 1-hour time frame. Before discussing the next week's analysis, note that we will start the market structure, SMC concepts, and advanced SMC batch on Monday. In this course, you will learn from the basics to advanced topics, including technical, fundamental, and sentiment analysis. We will cover candlesticks, market conditions, trends, bullish and bearish market structures, impulse and correction patterns, and how to map high and low. You'll learn about smart reversals, break of structure, change of character, internal and external structures, supply and demand, and much more. We will also delve into premium versus discount, trend joining levels, top-down analysis, buyer-seller modes, interbank price delivery algorithm, turtle soup setups, value gaps, imbalances, order blocks, mitigation blocks, break blocks, and reclaim blocks. We'll discuss liquidity, stop runs, smart money traps, and how to find optimum trade entries and targets using Fibonacci. For more details, you can contact us via the WhatsApp number in the description. Classes start on Monday, so register soon. Back to the analysis. On the 1-hour time frame, after a strong bullish move, the market has done a retracement here. This high, low, higher high, and break of structure indicate a bullish trend. This supply zone came from this order block, leading to a retracement after being tested. The market sweeps internal range liquidity, creating a relative equal low with liquidity below it. If the market sweeps this liquidity and tests the order block present below, a buying opportunity may arise within the zone from 23.21 to 23.19. As long as this area holds, we are buyers, expecting the first target to be the double top. And after its breakout. Looking at targets up to 2,362. On the other hand, if the market breaks below this level, tests the downside, and resumes the upside movement, we can see a return to the H4 level around 2240 to 2242. So, this is the current analysis of gold. Plan your trades according to these areas. Classes are starting from Monday, so if you want to join, message us. Share your opinions and questions in the comments. Thank you so much for watching, and see you in the next video.